Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CRICUT Inc. Annual Report. CRICUT Inc. offers a wide range of businesses and services that cater to users' creativity needs. The company's platform enables users to create professional-looking handmade goods through its connected machines, accessories, and materials. The company provides various types of connected machines, including the CRICUT Joy family, CRICUT Explore family, CRICUT Maker family, and CRICUT Venture, which are used for cutting, writing, scoring, and creating decorative effects on different materials. These machines can be integrated with the cloud-based software CRICUT Design Space, which allows users to create and work on projects across desktop and mobile devices. In addition to its connected machines and software, CRICUT also offers a range of accessories and materials, such as the CRICUT EasyPress, CRICUT Mug Press, hand tools, machine replacement tools and blades, and project materials like vinyl and iron-on. The company provides various subscription offerings, including CRICUT Access and CRICUT Access Premium, which offer users access to exclusive images, fonts, and projects. CRICUT also offers in-app purchases of images, fonts, and projects, as well as a range of craft, DIY, home decor products, and extensions. The company's products are available through its website, cricut.com, as well as through third-party brick-and-mortar and online retail partners and a network of distributors. Overall, CRICUT's businesses and services include connected machines, CRICUT Joy family, CRICUT Explore family, CRICUT Maker family, and CRICUT Venture, cloud-based software, CRICUT Design Space, accessories, CRICUT EasyPress, CRICUT Mug Press, hand tools, machine replacement tools and blades, materials, vinyl, iron-on, paper, adhesive vinyl, wood, leather, subscription offerings, CRICUT Access and CRICUT Access Premium, in-app purchases of images, fonts, and projects, craft, DIY, home decor products, and extensions. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a company's stock price to remain stagnant over a period of time. The stability of a company's stock price is often influenced by various market and economic factors. One possible reason for CRICUT Inc.'s stock price remaining unchanged in the past year could be a lack of significant growth or innovation within the company. If CRICUT has not introduced new products or services that have captured the attention of investors, it may not have been able to increase its market value. Another factor contributing to stagnant stock prices is industry competition. If CRICUT faces intense competition from other companies in the same sector, it may struggle to differentiate itself and attract new customers. This could lead to a lack of investor confidence, causing the stock price to remain stable rather than increasing. Additionally, economic conditions can also impact a company's stock price. A slow economy or changes in consumer spending habits can affect demand for CRICUT's products, leading to stagnant stock prices. Furthermore, regulatory changes or unexpected events such as natural disasters can also have an impact on the company's performance and stock price. In conclusion, there are several factors that could contribute to a company's stock price remaining unchanged over time. These include a lack of innovation, intense competition, economic conditions, and external events. CRICUT Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $18 billion. CRICUT Inc. trades at a lower price-to-earnings ratio of 12 times and a higher price-to-book ratio of 2.68 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 33% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 4.42%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth for CRICUT Inc. are largely attributed to its subscription-based services, including digital content sales and platform revenue. The company's ability to increase subscription fees and purchases of digital content has contributed significantly to its revenue growth. Additionally, the growth in cloud-based services subscriptions has also played a crucial role. On the other hand, the primary drivers of revenue decline for CRICUT Inc. are related to the sales of connected machines and accessories. The decrease in sales of CRICUT Maker, Explore, Joy, and Venture machines, as well as accessories such as adhesive vinyl and iron-on vinyl, has led to a decline in revenue. It is worth noting that foreign currency exchange rates have also had an impact on CRICUT's revenue, although the extent of this impact is not specified. Furthermore, customer rebates and sales returns have also affected the company's revenue, with estimated losses totaling $7,925,000 in 2025. The financial performance of a company has shown significant improvement over the past 3 years. In terms of net income, the trend is upward, with a 12% year-over-year decrease in 2023, followed by consecutive increases of 17% and 22% in 2024 and 2025 respectively. This growth can be attributed to various factors, including stable revenue and increasing profit margins. The improvement in profit margins is evident from the data, which shows that gross margin increased from 44.9% in 2023 to 55.1% in 2025, while operating profit margin rose from 9.1% to 13.6% over the same period. This increase in profit margins suggests that the company has become more efficient and effective in its operations, leading to higher profitability. The overall trend indicates a positive shift in the company's financial performance, with increasing net income and improving profit margins. These developments are likely to have a significant impact on the company's future prospects and growth trajectory. The company's financial performance has been a notable aspect of its overall success. One key indicator of this is the generation of positive operating cash flow. According to the provided data, the company has consistently generated significant amounts of operating cash flow over the past 3 years. In 2023, the company reported an impressive $288,097,000 in operating cash flow. This was followed by a substantial $264,968,000 in 2024 and $200,230,000 in 2025. These figures demonstrate a clear trend of positive operating cash flow, indicating that the company is generating sufficient funds to cover its operational expenses. The consistent generation of positive operating cash flow suggests that the company's financial management is effective, allowing it to maintain a healthy cash position while investing in growth initiatives. This is a significant achievement for any business and provides a solid foundation for future success. The company's debt level has experienced a notable increase of $11,071 between 2024 and 2025. This change is significant, indicating that the company has taken on more debt during this period. In terms of interest expenses, there are mixed trends observed over the years. Initially, interest expense increased by $141,000 from 2023 to 2024. However, in the subsequent year, it decreased by $97,000 from 2024 to 2025. Furthermore, a more recent trend shows that interest expense has actually decreased further, from -$326,000 in 2024 to -$567,000 in 2025. This indicates a reduction in interest expenses over time. Overall, the company's debt level has increased significantly, while its interest expenses have shown a downward trend in recent years. The performance of various regions and segments has been a mixed bag for the company. In terms of regions, Asia emerged as a manufacturing hub, while the United States served as a sales and marketing hub and logistics partner location. Europe and Australia also functioned as logistics partner locations. However, international markets across over 50 countries struggled due to significant risks. On the other hand, certain segments demonstrated strong performance. Online channels have been a growing revenue source, with projected increases in revenue from 65% in 2024 to 69% in 2025. Brick-and-mortar and online retail partners also prove to be significant sales channels. In contrast, international business has struggled due to exposure to substantial risks. The management of the company is optimistic about its outlook, highlighting significant growth opportunities in the US, Canada, and globally. To drive this growth, they plan to continue innovating and improving their products and services through new product development that meets user preferences. In terms of strategy, the company aims to expand internationally, which will require substantial investments in sales and marketing, distribution partnerships, infrastructure, and personnel. They also anticipate managing seasonality in revenue and gross margin due to holiday shopping seasons and promotional discounting activity. To support these efforts, management expects research and development expenses to increase in the near term as they refine product roadmaps. Sales and marketing expenses may fluctuate, while general and administrative expenses are expected to rise due to expansion, system enhancements, and public company expenses. Despite these investments, the company is confident that its cash balances and forecasted cash flows will be sufficient to meet its needs over the next 12 months and beyond. Overall, management's strategy focuses on driving growth through innovation, product development, and international expansion, while managing supply chain and expenses effectively. The company has a history of rewarding its shareholders through various means. One way they have done this is by paying dividends. According to the financial reports, the company has paid dividends in each year since at least 2025. This indicates that the company values its shareholders and is committed to returning value to them. In addition to paying dividends, the company has also implemented a share buyback program. In 2025, the company authorized $50 million for this purpose, demonstrating their commitment to reducing the number of outstanding shares and increasing earnings per share. The success of this program can be seen in the reports that list the number of shares repurchased each year. Concerns about inventory buildup and supply chain disruption have been identified in the extracted summaries. Excess inventory levels are a major concern, resulting from the company's inability to anticipate user preferences and respond in a timely manner. This has led to inventory write-downs or write-offs due to forecasting errors. The constrained global availability of critical components is another significant issue, with no alternative suppliers for several key components. This has resulted in potential supply shortages and long lead times, further exacerbating the problem. The company's failure to accurately forecast inventory needs may also result in manufacturing delays, increased costs, or excess inventory. These concerns have had a direct impact on the company's revenue, with a decrease of $18.2 billion due to fewer units of accessories and materials sold at a lower average selling price. Additionally, the provision for inventory obsolescence has been negatively impacted, indicating a potential loss of $19.7 million in 2025. Overall, these findings suggest that the company is facing significant challenges related to inventory buildup and supply chain disruption, which must be addressed to prevent further losses and ensure business continuity. That concludes the financial summary for CRICUT Inc. Feel free to comment below, and I will be happy to answer them when possible.